only two of the 11 S&P sectors have outperformed the S&P 500 so far in 2025. Technology, which is up about 28%, communication services up 21.3%. There's the S&P up 17.5. So only two sectors, the two growthiest of the growthy, technology and communication services, have managed to outperform the S&P. Everything else has lagged. Now, everything else is up from a little bit to a decent amount, but none of them have outperformed the S&P 500. So we talk about narrow leadership. What I mean is the opportunities to outperform have been very concentrated into a small number of sectors and a relatively small number of huge growth stocks. Most everything else has generally underperformed. You can see that a couple different ways. Obviously, the fact that just everything else has gone up a lot less. There's an ETF ticker SPXT. That's the S&P 500 without technology. So you take out the technology sector and you own the rest of the S&P, you're up 13.1% in 2025 versus the S&P up 17.6%. So you take technology out of the S&P and you're up about 4%, 4.5% less. So any way you slice the sector performance, anything outside of tech has probably hurt your performance, right? In terms of a general allocation, this is the relative performance of the SPX without technology versus the complete SPX that includes technology. We can see that consistent underperformance going, from the April market low to where we're at now. So again, I still see this as fairly narrow leadership, and I don't see any evidence that would argue differently from that.